Good morning, everyone. Welcome to our first webinar meeting co-hosted by the Kenya Embassy in Abu Dhabi, the Kenya Consulate in Dubai, and the Gulf Tax Accounting Group. Fellow Kenyans, ladies and gentlemen, let me at the outset take this opportunity to thank the organizers of this webinar, in particular the Gulf Tax Accounting Group, for partnering with us on this platform to discuss matters of mutual interest, our well-being in the face of COVID-19 pandemic, and our relation with our host governments. Allow me to introduce myself. I'm Kariuki Mugwe, Kenyan's ambassador to the United Arab Emirates, with effect from last year in May, when His Excellency the President, Uhuru Kenyatta, found it fit to appoint me as his representative in this beautiful country. It is therefore a humbling experience and privilege to serve in this capacity. Also allow me to introduce my colleague, the new Consul General of the Republic of Kenya in Dubai, Ambassador Peter Musebi Mwendwa, who we work very closely together when we are dealing matters Kenyan. During this meeting, I will address myself to three issues, notably the COVID-19, two, the formation of the Kenyan Business Council, and the economic substance regulations compliance. Fellow Kenyans, in March 2020, the World Health Organization declared the coronavirus disease a global pandemic due to the rapid nature of spread and presence outside the place of origin. The disease was codenamed the COVID-19, which is an abbreviation of the coronavirus disease of 2019. The disease was quite unprecedented. Unlike the other pandemics in recent times, such as HIV and AIDS, which is spread by the body contact, the avian flu, the severe acute respiratory syndrome, commonly known as SARS, Ebola, that were predictable and localized, the COVID-19 presented an initial scientific challenge. The mode of spread remained a puzzle to scientists initially and became of serious threat when there were speculations that it could be aerated, which means that it could easily be used as a biological weapon. Further, that within a short span, the world experienced a huge spike of spread with multiple epicenters in Asia, Europe, and America. The virus also spread in waves and certain circumstances threatened recurrence or resurgence in attack, meaning that an attack could not necessarily render immunity to the virus. Fellow Kenyans, ladies and gentlemen, this pandemic could only be compared to the Spanish flu, which occurred in 1918, 1920. Indeed, nobody in the recent generation and within the policy-making circles was present to see what happened during the Spanish flu over 100 years ago. Again, history has taught the world that those who took action are the earliest were able to contain serious outbreaks like the Spanish flu, thanks to the World Health Organization, that even in the panic around the world, there were recommendations for partial or total lockdowns. This was bad, but in the circumstances, a necessary evil to contain the spread. I cannot overemphasize the fact that economies were locked down and have indeed taken a beating based on level of preparedness. Both big and small economies have been affected in the adverse of their circumstances. But certain things were clear and common around the globe. One, economies were shrinking. There were job losses. Government support to the economy through economic stimulus packages Government emergency measures were also taken through hospitals, establishment of additional hospitals, establishment of technical measures, preventive measures, sensitization of the people on how to go about the issue, and identifying and cautioning of the vulnerable population, including the diaspora, among others. As an embassy and the consulate, we remained alive to the reality of A, the Kenyan nationals losing jobs through retrenchment, forced paid and unpaid leaves, B, Kenyans getting stranded at the airport or in the countries that they were at that particular time and unable to travel back home, C, domestic workers being thrown out because of the employers losing their jobs, and distress cases that rely on casual labor. Our first reaction was to ensure that our nationals are not severely affected. We reached out to human resource departments of various organizations to ensure that our people are not among the first to be kicked out. Efforts were also made to get assurance over the paid leaves, the unpaid leaves, and the severances for separations. Secondly, we opened up channels of communication and engagement with the setup of emergency numbers to call in distress. Our Facebooks were alive and active, and we also engaged communication through our WhatsApp groups. Thirdly, we responded to cases of stranded nationals at Dubai airport following the aborted Kenya Airways flight of the 25th March 2020 when the airspace closed, alongside other Kenyans who wanted to go home. The mission sought and secured approvals and clearances for special repatriation flights to ferry Kenyans back home. On various dates, as you may remember, we had a flight on the 7th of April this year, we had a flight on the 8th of May, and we had a flight on the 15th of May 2020. The flights were meant to ease burden for Kenyans who were stranded or seeking Medicare in Dubai, or were laid off, or were sent on paid or unpaid leaves, and families, of course, who also wanted to relocate back home because of the current situation. A total of 461 passengers were successfully airlifted. The flights were, however, a disappointment, and based on this, another flight scheduled for 22nd of May was cancelled as the turnout on the previous flight was so poor. I suppose this was occasioned by the wait-and-see attitude by many people who would have otherwise traveled home. Nevertheless, we have continued to receive several appeals, and currently, even before the airspace opens, organized a flight last Saturday on 27th of June 2020, and hopefully we will be having another one soon on the 11th of July 2020. I appeal to interested Kenyans to look out for this opportunity with effect from today. The embassy and the consulate continue to actively deploy our resources to support vulnerable Kenyans, providing guidance on labor issues, counseling and moral support to needy cases. We have also teamed up with professionals and welfare groups in the UAE to donate food rations to the most affected. We have also established 4 helplines, 2 in Dubai and 2 in Abu Dhabi, to address any issues the diaspora may be seeking guidelines or clarifications. On the same note, as the representative of the government in this part of the world, we welcome the efforts that the UAE government has extended to our citizens, such as relief on work permits and residency visas for those who have unfortunately lost their jobs and incomes. Nonetheless, the measures taken by our host government have been monumental and highly effective since March 2020. Nobody was quite sure or tell how long this situation was going to last. We are just emerging from the lockdown. While the UAE's commercial activities have not yet fully resumed, the most important aspect, will be to follow and adhere to the laid down protocols to ensure personal protection and that of your loved ones and the public and avoid a resurgence. Fellow Kenyans, ladies and gentlemen, as we breathe a sigh of relief, let me not lose sight of the situation at home. The Kenya government has instituted equal measures to stem the spread of COVID-19. However, the spread of virus on the African continent had the world and the scientific community perturbed. This is because it is not as fast as it was initially predicted, and the spread has defied the conventions in pattern and mix. For example, this is the time the numbers are increasing at home, unfortunately, coming at a time when population has shown evidences of fatigue to the emergency measures already taken down. You will recall that at the start of the pandemic in March 2020, His Excellency the President of the Republic of Kenya unveiled an 8-point economic stimulus package targeting infrastructure, education, SMEs, health, environment, and manufacturing. Subsequent measures also targeted taxation, also cash transfers to the orphans and the elderly, refunds on VAT, and even salary reductions to members of the public, civil servants and state officers in government. The Central Bank of Kenya carried out some reductions on loans so that people are not heavily distressed. Pursuant to this, the Central Bank of Kenya introduced relief on mobile money payments for Kenya's #1 favorite M-Pesa transactions to encourage cashless payments, hence prevent disease spread and cushion the lower bracket of the economy. The measure was initially for 3 months until June 2020, but has been extended to December 2020. Similarly, in March 2020, following the outbreak of COVID-19, His Excellency the President also commissioned the Kenya COVID Funds Board, whose sole responsibility is to mobilize resources for emergency response towards containing the spread, effects and impacts of the pandemic. The government recently announced home care as a way to go to ease pressure on medical facilities after lifting the lockdown. In implementing its mandate and in the face of limited financial resources, the Kenya COVID Funds Board identified the Kenya diaspora and the Kenya businesses abroad as important players in remittances. It has therefore launched an appeal for contribution to the COVID-19 Emergency Response Fund to this segment of the population. I wish therefore to share with you this message and distribute a flyer, which we're also sharing it in our Facebook, designed by the board for our use. The information is also available in our diaspora website and in the embassy and the consulate websites. Fellow Kenyans, ladies and gentlemen, the second issue after the COVID-19 was the formation of the Kenyan Business Council. Sometimes back in 2017, we embarked on the process of having the Kenyan Business Council, registered by the UAE government through the Dubai Chamber of Commerce and Industry, under the interim chairmanship of Mr. Mosum Somji. We submitted our registration of the Business Council in 2018, but was turned down due to our inability to reach the required threshold. Later, we convened a meeting where we tasked each member to collect relevant documents from at least 5 companies to be submitted to the Dubai Chamber of Commerce. Again, we failed to meet the mandatory minimum requirement of 40 trade licenses to support our cause. I wish to reiterate the importance of having our own business council in strengthening our collective bargain. Among other objectives, the principal aim of the Kenyan Business Council is to promote Kenya's commercial and business interests in UAE and encourage commercial and economic activities, investments, and other initiatives between the two countries. I therefore urge the Kenyan business community owners present here today to give it more thought and submit their trade licenses to either the Kenya Embassy or the Kenya Consulate in Dubai so that we may finalize the process. I want to thank you in advance, your commitment and active participation towards the formation of the Council in due course. I intend to organize another webinar where we will discuss matters on how to advance our business interests, contribute to development and the management of the Council. Ladies and gentlemen and fellow Kenyans, let's get to the third issue on the economic substance regulations. In 2019, the UAE government introduced the economic substance regulation pursuant to the guidance and requirements issued by the European Union and the Organization for Economic Cooperation and Development for low or no corporate tax jurisdiction for purposes of establishing international standards and fair business practices. The economic substance regulation has three major components. First, is a company should be directed and managed in the UAE for specific activities being carried out. Two, the company's core income generating activity should be performed here in UAE. And thirdly, the company should have an adequate level of qualified employees, premises, and annual operating expenditures. The rules apply to companies engaged in core income generating activities, such as banking, insurance, fund management, financing and leasing, headquarter companies, shipping businesses, investment holding, IP activities, and distribution and service centers, except companies owned directly or indirectly by the UAE government and their subsidiaries. Enterprises, companies, or entities that fulfill the requirements for regulation should, as a practice, prepare a report to the regulatory authority, demonstrating that they satisfy the economic substance test not later than 12 months after the end of each financial year. The regulatory authority will then submit the report to the competent authority in UAE. This is not any different from the Kenyan situation of the provisions of the Companies Act, which in part requires that companies file annual returns with the registrar of companies. By now, I believe you should have received the notification from your licensing authority regarding the deadline for filing the economic substance report for your businesses. As an embassy and a consulate, being representatives of the government, believe in the international rule-based system. We do not encourage you to break the law, and we feel we are duty-bound to remind you of your obligations under the UAE local laws for seamless operation and to enhance our bilateral trade relations. This equally applies to other local laws, including labor for both employers and employees. I am encouraged that our Kenyan nationals should not find a challenge in fulfilling these requirements, since they are a continuation of the local requirements at home, To drive the point home, these are essential courtesies, status, or essentials in situations where there is need for arbitration of a legal or trade dispute. I would therefore encourage that we strive to be on the positive side of the law to maximize our potential to benefit from the circumstances. We understand that managing the complex obligations of these laws may be an ongoing challenge for the Kenyan businesses. However, we strongly believe that with the formation of the Kenyan Business Council and a resource from the Gulf Tax Accounting Group, it will be easier for the Kenyan businesses to comply. We are therefore looking forward for an excellent meeting with our experts and working relations with the relevant stakeholders, including the Kenyan Business Council and various consultancies, helpful And it is my hope that each one of you will find GovTax Accounting Group helpful to build a solid foundation. I look forward to a fruitful discussion and engagements during this meeting. Thank you, and may God bless you all.
Thank you very much for that insightful opening remarks, Ambassador Kariuki. But just before I let you go, I have one question to throw in for you. So last month on June 11th, the government tabled Kenya shillings 2.7 trillion. I think you've touched upon that budget for the 2020-2021 fiscal year, but there was no any incentive for Kenyans in the diaspora. So according to the Central Bank of Kenya, Kenyans in the UAE in particular contribute the highest amount of remittance inflows to Kenya. However, in the budget, there wasn't any mention of what incentives and relief are being extended to overseas citizens during this season of COVID-19. Maybe you may want to shed more light on that.
Thank you, Joyce. I would like to say that everybody was taken by surprise with the emergence of this COVID-19 pandemic. And I would like to tell you that much of what the government did on the budget was actually to safeguard Kenyans, the local Kenyans who are most affected and vulnerable to the situation at the time. For the diaspora, what we are currently doing, and maybe you may know, you may not know, is to encourage them to continue working from where they are. And if they are in any way distressed, the Kenya government and the embassies out here are as much as possible trying to assist them in the way we can. But directly to the remittances that they do, the Kenya government appreciates what they are doing. But the priority for now was not only look at what I've just talked about, the new fund being established and reaching out to the diaspora to assess the situation, but also to look at the vulnerable group, which is back home for the time being.
Right. Okay, thank you so much for that. And for the sake of time, if any one of you has a question for the ambassador, we will open up the Q&A session after our next webinar discussion. You just need to select the Q&A icon on the right-hand side of the screen. If you look to your right, you will see a small icon written Q&A. Just click on that. Type your question in the compose box and then select send. So at the end of the session, I'll read them out and our panelists will answer them. So at this juncture, I would like to introduce to you Mr. Bill Anderson and David Daly, who are both partners at GovTax Accounting Group. Bill and David will give us an overview of the UAE's economic substance regulations as Kenyan business owners licensed to do business here in the UAE. They will also clarify exactly the purpose of the regulations, who they apply to, and the procedures that you all need to take in order to be compliant. So without further ado, over to you, gentlemen.
Thank you, Joyce.
Good morning.
Thank you, Your Excellency. Good morning, everybody. Okay, so without further ado, we'll head straight into the next session. So just a little bit about GovTax Accounting Group. As you've just heard from Joyce, we are a Dubai-based accounting and tax firm. Joyce is our Kenyan partner in the business. We have myself, David Daly, Peter Watley, again, all very experienced accountants and CFOs in the business. And we help businesses in the region from all parts of the world set up properly and get used to legislation like VAT, accounting systems, and things like economic substance. So again, I won't spend too long talking about who we are or what we do. And again, we'll provide slides as part of this session today so that you can read them at your leisure. So yeah, just as an introduction piece, we're going to talk about what exactly is the background for economic substance, where did it come from, why is it after arriving, when did it become effective, what types of businesses and entities are caught. And this is a particularly interesting one because a lot of people think they're not involved directly, but they are actually picked up indirectly. Are there exemptions? And ultimately, how can we in GTAG help you? The European Union has been working to improve tax governance on a global level by preventing and countering tax fraud and evasion and avoidance. And as part of this program, a number of low and no tax jurisdictions were identified as areas where they needed to improve and commit more towards this framework. So ultimately, I guess what was being looked at here was where companies in some parts of the world where there's higher corporate tax and income tax may try and move to low tax jurisdictions using shelf companies or shell companies and transfer profits to that lower tax jurisdiction without necessarily having a real business operating there. So that's part of the background to what the UAE is now committing as part of the OECD membership to make sure that they stamp out potentially this type of practice. And that's not to say, that companies can set up in parts of the world where there's lower tax, but it's got to be for a valid reason, and they have to show it's a genuinely real business. So we're going to go through the ideas behind what you have to look out for. So David, if maybe you could take the audience through the Ministry of Finance's economic substance flowchart, will probably give them a pretty good idea as to whether the regulations apply or not.
Okay, good morning, everybody. So first things first, as Bill said, this is about substance. It's not about what the paper says. So we're conscious that our trade license may say that certain activities are conducted. However, there can be a difference between that and what's actually conducted or what a business historically has evolved to do. So first things first, do you have a trade license? Are you a legal entity within the UAE? You move forward. The next question you ask yourself is, well, do you conduct any of the relevant activities? There are 9 as we're aware, and we'll get into this in more detail later. It may seem obvious that your business is not maybe, say, a lease finance business. However, if you have a group company back home in Kenya and there is a loan between the 2 entities, which is formalized at, say, LIBOR +1 or something like that, or EURIBOR, given we're in the UAE, that would actually come under lease finance business. So you need to understand the regulations in detail, and therefore you take a deeper look into whether a relevant activity does or does not apply to your entity. Based on that review, you then notify the government, and there's different notification dates, that you fall under one or more of these relevant activities. Once that's done, you then have until the end of this year to put together a pack which effectively proves that the entity here is economic substance and that it's not a shell here for the purposes of avoiding taxes in tax jurisdictions. The holding company one, which is mentioned here on the slide, is a particular beast within the 9. You can only be a holding company and you cannot be anything else. You either are a holding company or you're not. Whereas lease finance business, which I mentioned earlier, you could be a lease finance business and a service business. So again, you need to understand how these relevant activities move around one another. So now you put together, as I say, a pack for each trade license, proving that under that relevant activity, the entity here has substance, and that must be lodged by the end of the year. The one which is highlighted here is IP, intellectual property. So one of the classic ways of avoiding taxation is to move intellectual property to a tax-free jurisdiction and charge the usage of that to a group company in a tax jurisdiction. High-risk IP is where the UAE entity didn't invent it, didn't create it, didn't buy it. It is basically coming from another entity abroad and sent here. Now here's the critical part of all of this. If at the end of the year, once all this is submitted and you have not demonstrated substance, the UAE government will communicate to the UBO, the home entity, that government, their authorities, that the entity in the UAE does not pass economic substance, and that has got consequences. And Bill, I think you're going to pick up on that one.
Sure. So look, the key thing here, if you're not showing economic substance, everybody focuses on the types of penalties that will be imposed in the UAE on your company. So, have you done your notification on time? Have you filed your return at the end of the year? And there are penalties, and they're pretty substantial, going from 50,000 dirhams to 300,000 dirhams to losing your license. But what we're pointing out to companies is ultimately the real hit for you will be at the end of the year if you don't comply, as David said. This automatic exchange with the relevant authority in the UAE, with the relevant authority back in Kenya, will more than likely result in your company's trade revenues being taxed at Kenyan rates, and penalties being applied thereon. So this is what companies ideally need to avoid happening, and to make sure that they do it properly. Okay, so just as an idea of when, so this has been effective, came into force on the 30th of April 2019 through the Cabinet Minister's Resolution number 31 of 2019. And a little bit like VAT, when VAT was introduced initially, there was probably about a year prior to it coming into force where the government and the FTA did a number of workshops across the region. And then when it went live on the 1st of January 2018, a lot of companies complained, that they didn't know much about it and that they hadn't been informed about what it was. In fact, there was actually quite a lot of information on the ground about VAT prior to it going live. What we're finding now with economic substance, and I think a lot of it has to do with the COVID-19 situation, is, most companies for the past 3 months certainly have, been struggling to survive and trying to deal day-to-day problems in their business with COVID-19. And this deadline has come and arrived. And for most companies, the deadline was the 30th of June for getting the first notification piece done. So if you haven't looked at this for your company yet, you really do need to look at it. The communications that were coming from the various licensing authorities were different from each other, so they had a lot in common, but there are differences between the various licensing authorities. And one of the points David also made is that if you have 5 or 6 entities set up, you can't do a group return. Each entity must have a return done on its own because each of those businesses are different. So unlike VAT, where you can do a group return, you can't do a group return in economic substance. So in terms of timing, as I've mentioned, there are 2 key things to be aware of. Number 1 is the notification deadline. For most companies, that was May and June. There are a few in June and a few in July, but not many. If you're looking for a list of those ones, then we can provide that as part of the slides that we send out subsequently after the presentation today. Then there's the filing deadline. So this is where at the end of this year, you must produce this pack, which basically shows all the things that provide economic substance and demonstrate economic substance with the company that you have in the UAE. And this is an important piece. So, most people have 6 months between now and the end of the year to put that in place. And it's really important that you don't do this, with 2 or 3 weeks to go, because there is quite a large amount of work that needs to be done. And look, if nothing else, the penalties that may apply should drive most people to get this bit done. But, if most companies are actually putting best practice in place, a lot of the information that is required should already be in place. And it's a matter of putting it together. However, and we'll get into this in a little bit later, there may be gaps. And it's very difficult for an individual to understand what those gaps might be if they don't have expertise with economic substance. So that's what part of our process today is going to be about. Hi, Dave. Do you want to just have a run through on the relevant activities for the audience?
Yeah. So banking, insurance, investment fund management businesses, that should be relatively straightforward. I spoke about lease finance business. which you might think normally mightn't apply to you. And I give you the example of how it can. Headquarters business, again, we go back down to, well, the substance of it. It might be within your group structure, not where the headquarters is, but once you actually investigate what's happening within the entity, what is the substance of what that entity does, then you come to the conclusion, well, that's what it is. Okay, move on to shipping. Shipping is what it is as well. Holding business, I mentioned, you only can be a holding business. If you're a holding company, holding shares, investments in different entities, then that is by definition a holding business. However, should that entity have a loan out to one of the companies held, then it's a lease finance business. It is not a holding business. You can't be both, not with holding. You can be a headquarters and a lease finance business. Intellectual property is really the big one that they're after. This, as I said earlier, is where you have intellectual property which was not created in country or by the entity that is holding it. It's either purchased from abroad or sent from another entity by abroad. Products are sold in a third country where there is taxation, and that entity abroad, part of your group structure, is being invoiced by the UAE entity for the rights to use that IP. And that comes under a further heading called high risk IP. And there's particular definitions for that and examples given. The final one is, I think, the one, certainly in my experience, most people fall into. This is distribution and service business. Effectively, if you are a UAE entity supplying services or goods in any form in the year 2019, and remember, for this year's reporting, we're looking at the financial year 2019, January 1st to 31st of December, then you fall under this. And you may go, well, hang on a minute, I'm only doing, only 1% of my turnover is sales to a related party. Well, then you'd still fall under service center business. It's not your main business. And in demonstrating and putting your file together, that is part of your explanation that the entity here has economic substance, and the fact that there was some trading which falls under this category, in fact, if anything, supports the position that you're taking, that your entity here does indeed have substance. So there's a lot of sitting down and working through scenarios. There's a lot of reviewing the legal paperwork which underpins your organization, matching that against what it is you actually do, and then working that against the legislation, doing a gap analysis if you like. And as I say, if you fall into these, then there's a large piece of work to do to become, or to prepare a pack to submit to prove compliance. There will be audits. So the UAE government come out and audit your entity, and they go, prove to me. You sent me this paperwork, I've read it, it's good, well done. Now, I want to investigate, I want to drill in to the submission that you have made, and you need to be able to back that up, which means the pack, if it's correct going in, it won't be an issue to defend it. So it must be correct. You must be both prepared in terms of preparing the relevant documentation to submit, and also be prepared to be audited against that submission. Just so you also understand, if you notify the government that you do not fall under any of these 9 relevant activities, they can still audit you. It's like VAT. The Federal Tax Authority have the right to audit any entity and any individual. Okay? So keep that in mind.
I think it's also worth noting, Dave, I think a lot of Kenyan businesses will fall probably under 2 or 3 main headings here. Definitely a lot of them will fall under distribution and service center businesses. And so, you know, an example of something like that would be you have your home business back in Kenya, which, let's just say, supplies timber or flowers to your business in the UAE. So there is a connection here straight away. You have a foreign connected company in Kenya with a local company in the UAE. So there's a connection, and that's the first thing that they will actually look for. And that's fine, provided everything is done properly. But there is a danger that the company that is based in the UAE will pay a much higher cost to buy those goods. And effectively, it's an inflated cost, which effectively is taking taxable profits, which would be taxed higher in Kenya to a low and no tax piece in the UAE. Now, again, putting the paperwork around that and looking at it to make sure that it matches what it should do is very, very important. And I think a lot of people initially, when they look at these 9 activities, might think, actually, that's not her business. But, you know, it's a little bit like, you know, it's difficult to not know what you don't know. So this is why you do need to engage experts, whether they're an accountant or a lawyer, and in some cases a mixture of both. So for example, we're working on a couple of clients where we're working with their lawyers because, again, a lot of it is examining the documentation that they have in place. Again, the UAE has a lot of holding company businesses, and the assets that those holding companies have break into many, you know, direct shareholdings of other businesses, investments, dividend generating businesses. So again, you've got to be very careful doing what we call the diagnostic piece initially, to look at exactly what is your business. And this is not a paper only exercise. The whole purpose of economic substance is substance over form. So you may have one thing written down as, you know, what's on your trade license, but in reality something else might be happening. And that's effectively what the auditors are going to come in to look for. So again, you know, those are the 9 key areas. And again, within those areas, there's quite a diverse mix of businesses that potentially go under. We've highlighted number 4, which is lease finance businesses, headquarter businesses. Again, there's lots of headquarter businesses over here, which are absolutely 100% valid. But again, these companies need to go through the process of putting their information together so that it stands up to scrutiny. There is a very small exemption, and that is basically any licensee or company that is directly or indirectly owned 51%. So His Excellency mentioned this at the start, by a UAE government or emirate. In that situation, it would be exempt. I don't know how long that exemption is going to be in place, but it's certainly in place for this year. So if you're an entity that is in that scenario, then you're exempt for this year from doing economic substance reporting. And again, I think, David, it might be worthwhile just going through the lease finance business piece again. I mean, this is kind of a definition of it, but I think an example would be useful for our audience.
Okay. I'm going to read it, which I know you should not do with slides, because you can obviously read it while you are looking at it. A UAE entity is considered in a lease finance business if it provides credits or rent assets, equipment, or any other good to another person for consideration. Providing credit includes making loans or entering into finance arrangements such as hire purchase agreements and finance leases. Let's break it right down to brass tacks. You are a UAE entity with a British operated group related party. The UAE entity provides a loan, million dirham, and it provides it at IBOR, the Emirates Interbank Overnight Rate, plus say 6%. That's a lot of interest. And what the fear is that by putting these loans in place, you are loading additional costs on the UK entity, which lowers their tax liability, and moving those profits across here to the UAE. And it may be a case of you're a goods or commodities trading business. It wouldn't be unusual for group entities to make loans or provide financing across the group. But and you, by the way, ESR does not stop you doing any of these things. It's just that you've got to do them in a manner which is reasonable from an individual looking at how the market might normally operate. So that's how you've got to test.
Perfect. Thank you, David. So again, for a headquarter business, again, it's worth explaining this because a lot of companies and a lot of Kenyan businesses have set up headquarter businesses here. So what is the definition of a headquarter business? So it's a UAE entity that provides services to other foreign group entities, i.e. the entities back in Kenya, and through the provision of such services has taken on, 1, the responsibility for the overall success of the group, and 2, is responsible for an important aspect of the group's performance. So I've seen quite a few companies here where, for example, you know, the finance team and the executive team are based in Dubai, but the operational side of the business may be based back in Kenya, or if it's other countries, based there. So again, there are benefits, obviously, and how that company reports its results and where it gets taxed. So it's very important, again, how structures are put in place, how contracts are written, and how they're carried out. And if this isn't looked at, and it isn't necessarily looked like this, because again, before economic substance was here, before VAT was here, accounting and the contracts were probably quite a bit looser because this legislation wasn't here. So now that the legislation has changed, companies need to relook at everything, but particularly if you're a headquarter business, to make sure that you fit the definitions and that you can provide economic substance. So if you have a headquarter business here, and they have 2 people based in the office, a very small little office, and no other employees here, it's going to be fairly challenging. It's going to be very challenging for that company to justify itself as a headquarter business. They really, adequacy is a term that's used through this legislation. Adequacy is quite a subjective term. But if I was an auditor working for the government, looking at this type of a business, I would probably be concerned if I had a business generating $200 or $300 million and had maybe 1 or 2 people based here. I'll also look to see what are the qualifications and skill sets of those people. So are they just figureheads, or are they genuinely people who know what this business is about and are actually the senior executives within the business? So the devil here is in the detail, but there is time to have this looked at. We've mentioned as well about distribution and service center businesses. So again, purchasing from your foreign connected person, i.e. the business back in Kenya, and importing and storing in the UAE component parts for materials for goods ready for sale, and then in some cases reselling those goods outside of the state again. Now, what's interesting about that is I've seen quite a few questions around this piece. What if we're not purchasing from our foreign connected company, but we're selling to our foreign connected company? So it may not fit the exact phrase in the legislation. And my advice to companies on that has been, guys, you need to look at the substance. Is there, if I was looking at this as an independent auditor, would or could I look and see here that people are deliberately, increasing or reducing sales or purchase prices to move the taxable profits to the lower jurisdiction? So anytime there's a foreign connected person, and my view would be, even if it's not importing it into the state, but just buying it from the Kenyan business and selling it somewhere else, that would fall under the scope for examination. So I think that's a really important piece. As much as possible, have your paper trail to back you up and do your diagnostic, but actually look at the underlying transaction, what it's trying to achieve. And if that can be interpreted as a way of trying to avoid tax, then you need to make sure that you're rectifying that scenario. Service centers is slightly different. So again, we see a lot of businesses which are service centers by nature, i.e., you may have a company here providing services. And again, this is very popular in the UAE, and it's a great place to have it. So you're providing professional services, for example, to a foreign connected person. So I may have an office here with 30 lawyers providing a lot of legal services to my businesses back in Kenya or any other part of the world. Again, you need to look at how that's being transacted and how it's being accounted for, and is it genuine? And again, it may seem genuine to you, but again, you've got to look at this with a fresh pair of eyes to ensure that it ticks the box from the point of view of the PAC and the auditor. Dave, do you want to run through the penalties? Is that okay?
Yeah, sure. The penalties are quite severe, but any of us who've been here long enough know that tends to be the case. So non-compliance, i.e. if you do not file notification before deadlines, you're looking between 10 and 50,000 dirham. Okay, 10 to 50,000 dirham for failing to notify on time. And that's the first time you do it. I can tell you, looking at, and Bill used a good example of how the VAT regime was brought in, and now we're bringing in the ESR regime. There will be people who will miss the first, second, and probably even third and will end up paying extremely large penalties. This is something you have to take seriously. It is something you need to do. If you then begin, bear with me a moment. If you then begin, if you're then found to give incorrect information, now the penalties get very severe. They've given indications in the hundreds of thousands, jail time, trade license being cancelled, information being sent back to tax or places where your group entities have been trading, and they have been able to reduce their tax liability in a tax regime against revenues which have been associated with the UAE. This is one of those things you just need to do, and you need to do it properly. At the end of the day, within a year of the European Union declaring that the UAE and many other countries were not playing fair when it came to tax, in April that following year, the UAE brought in this legislation to deal with that. That should tell you, should demonstrate to you that the UAE government is very, very serious about this, that it wants to be seen by the international trading community to be playing fair with regard to competitive behaviour, with regard to tax competition, and that it will, to protect itself as a country, come down hard on those who do not follow the rules that are in place.
I think it must be worth mentioning as well, Dave, that, you know, as a business owner, I like keeping my information as confidential as possible, not just the information of my company, but also my personal wealth information. And, you know, one of the impacts of failure to abide by economic substance is the information exchange between the various authorities, not just of my company here, but of my ultimate parent company. And again, the ultimate beneficial owner. So if you're a beneficial owner, you know, and you're sitting 2 or 3 levels back between underneath nominee shareholders, all that's going to come out in the wash. And for a lot of individuals, that's going to raise a lot of very uncomfortable questions. So looking at this and giving it the respect it deserves is really, really important. The financial penalties themselves, whilst they're not, you know, they're not massive. I mean, for the first time around failures between 10 to 50,000 AED. But for me, the real penalty here is ultimately, if you fail it, then the danger will be not outside of just losing your trade license if you fail it a second time around, but the actual exchange of information and what the repercussions of that may be. So, you know, setting up companies in the UAE, it's a brilliant place to do it because it's obviously a hub between all these various continents. But you got to do it right, and you know, and that's basically a big part of what this is all about. It's about doing it correctly, and it's no different to, you know, I mean, I'm originally from Ireland, worked in London for many years. You know, we had companies and banks where I used to work in. You know, we set up across different parts of the world. And it was really important that we did that with respect to the tax rules and regulations for each jurisdiction we did it. Now, we also, as any company would do and as any entity would do, looked to optimize the tax structures for those vehicles. And it's a very hot topic, obviously. I'm from Ireland. The corporation tax rate now is 12.5%. That's a very hot potato at the moment when it comes to the European Union. But it's really important that if whatever the local tax laws are, you comply ahead of time. And sometimes if you try and do things retrospectively, it's too late. You will have suffered that hit. So for example, if you manage, because of failure to do this twice in a row, you know, if you've got your trade license taken from you, I think as a company, you're going to find it very difficult. And as directors and owners of those companies, you will find it difficult to be able to set up potentially more businesses in the future. So red flags start to come up. And, you know, as part of this whole global piece now, information between banks and credit agencies is readily accessible. So whilst it's great that we can, you know, tap into lower forms of funding, you know, so for example, for companies that may be in Kenya can tap into lower funding for European banks, etc. That's great. But don't forget, these banks share information as well. They're all part of the economic substance piece. So, you know, it's an important one to make sure that you don't fall foul of. The powers, again, for the economic substance are pretty similar to the powers that VAT inspectors get and VAT inspectors have. So the right to enter your business premises, provided it's at reasonable hours, there's no excuse for you stopping them, and they will pretty much have full authority to enter your premises. They can examine and copy documents and take documents with them. If there's connected premises, they can enter those as well. This is typically used in terms of right to exercise the power when they're doing an investigation. So you really, as much as possible, want to avoid this piece happening. And this is why one of the services that Gulf Tax Accounting offer, and we do a similar piece for VAT, is if you are selected for audit, it's really important that you get in as early as possible and do some of your housekeeping. But it's also really important on the day, and we were having a chat about this earlier. Part of my job when I worked in accounting practice many years ago was I would actually be at the owner's premises on the day that auditors from the government would arrive. And that was to ensure that they had a very quick examination. Whatever they needed, they were given quickly. The right information was given to them. People weren't speaking out of turn. And that they were in and out as quickly as possible and satisfied with any questions that they had. Sometimes the worst person to talk to auditors are actually the business owners, because they are thinking in a different way to an inspector. So, as much as possible, if you get yourself set up ahead of time, you won't have to go through this particular process. For anyone who's ever received a VAT inspection, or a revenue inspection, you obviously will have, not particularly pleasant memories. It's not a particularly pleasant piece when a person is bombarding questions at you either. So that kind of comes to our next piece, which is really, we're wrapping up in terms of what we can do, but how can we help you on the ground in the UAE? So we can help you with doing an initial assessment at the very start, this diagnostic that we've talked about, to see which of any of the activities your business may fall into. And that's not something that's always immediately apparent. So we go through a process of reviewing your business, requesting information, and we'll pretty quickly find out what activity, and in some cases you may have a couple of activities as well. The notification filing at the moment, I think we're calling it fining, because for most companies there's going to be a fine for failing to notify. This has been one of the challenges over the past few weeks. A lot of companies didn't think they had to do the notification filing because they didn't think they fitted any of the 9 categories. So they did a self-diagnostic, and I think that's part of the challenge. It's a little bit like the blind leading the blind. I wouldn't expect someone to have the skill set to do this if they're not up to speed in this particular legislation.
Bill, I'm just going to jump in for a moment here. You may have heard different things from different people and from even some major consultancies and practices, which are conflicting with each other. My bit of advice in this country is where 2 people in authority give you 2 different pieces of advice, whether you should or shouldn't do something, do it.
Yeah, it's better in terms of a conservative piece just to cover yourself off by doing it. The gap analysis is ultimately then for the second piece of this work. So you've done an assessment, you do fall into one of the 9 categories. Now when you do a gap analysis, you can see there are things you don't have in place which you should. So some of those things are, for example, do you hold board meetings? Do you take minutes of those board meetings? Is there a director who lives in the country and is based in the country? Who performs the income generating activity? So there are a number of things which you have to show, which will come up as part of this gap analysis. And let's say out of the 15 different things you fail 5 or 6 of them, then you will have a period of time to put your affairs in order and do your housekeeping to see if, for example, you didn't have board meetings happening. We provide, for example, director services, we provide company secretariat services, we perform, as you can see under section 6, we perform a lot of outsourced services. And outsourcing of your services is acceptable for economic substance. So, what you want to do as much as possible is show that your accounting services are happening in Dubai, not back in Kenya or not back in the UK. So that's where accounting outsourced services are quite useful. And documenting your processes and procedures. This is something we see, even if without anything to do with economic substance, this is something that's really weak in most companies. They don't have their processes and procedures documented. And that's one of the things that the auditors for the government will be looking for is, demonstrate to me how this works. Because the first thing they'll want to come in and do is actually test that. So it's very much like an audit. And I used to be the head of internal audit for one of the banks. So the first thing I would do is I would say, walk me through your process. And all I'm waiting for is a company to trip up. Okay, so again, we've been giving people a lot of assistance over the last couple of weeks in particular because of the deadlines for the notification return. But there's a full return at the end of the year. And that is definitely a more complex piece of work. And again, looking at your company structures, depending on the nature of your company, you may have a very simple company structure. And if that's the case, that's great. It's going to be a lot quicker piece of work. Just general advisory, again, it's difficult sometimes for people to know where to go. So David and I are part of a number of expert groups, and it's really interesting. We're looking at other consultants, and this is something we've noticed when VAT came out. We have both worked in VAT for over 25 years. When VAT came out originally, we had a lot of accountants coming to our seminars learning about VAT. And then a week later, they were out giving advice to people. That would frighten me if I was talking to somebody to get VAT advice from somebody who literally has never done VAT. This is going to be the same situation with economic substance. Economic substance in one form or other has been in Europe for quite some time now. So we've had the advantage of seeing this happening. For this part of the world, economic substance is quite new. And I think a lot of people will struggle. And the danger for this is if you have an in-house accountant who really doesn't know about economic substance, and for the most part, I wouldn't expect them to, but they're not probably going to put their hands up and say, actually, I don't know about this. So there is a danger that you have this false sense of security that you're fine. And every single client that we've met so far, we have been working with their CFOs or with their accountants to make sure that the gaps that they have are, there's a certain amount of education, but there's also a certain amount of actions that need to be taken. So that kind of ultimately is, in a nutshell, economic substance. There's a whole raft of stuff, obviously, around this particular piece. The benefits of working, whether it's with us or other experts in the space, is it's going to save you time, money, and stress. And for me, the big one is stress, because I don't know what's going to happen if I fail economic substance, and that's something I don't want to be worrying about at night time. Obviously, it will avoid penalties and legal prosecution. And again, if you've got a group of professionals working both here and back home in Kenya, having a key point of contact is quite important. We work with in-house staff as well, so that's not something that's unusual for us. I think a big part of it, though, is, ultimately there will be investigations and audits. And again, we can provide assistance. Ideally, prevention is better than cure. So as much as possible, putting things right in place at the very start is important. And again, trying to avoid all the misunderstandings. Again, every day we see people talking about different things. So look, it's challenging for companies who, at the end of the day, if you're the owner of a business, or you're running businesses, your number one goal and objective is to make money in the business, get over all the challenges that we've had with COVID-19. So this is something you don't want to get falling foul of. So again, a number of benefits from working with the likes of ourselves. I think we have kind of come to the end of our time. Our contact details are here. Joyce will obviously pass on our slides, and if anyone has any questions or queries, please feel free to email David or myself, and we'll do our best to help you with any questions or queries that you have. But thank you for your time.
Thank you very much, David and Bill. We will now open the floor for your questions. There are a few questions that have come in. The questions are a mixed bag. So at this time, I'm going to give you a break, Bill and David, and move to the ambassador, Kariuki. If you could unmute your mic So the first question is asking, what is the process for submitting the licenses to the consulate? So I've replied back, you need to send your trade license to dubai@mfa.go.ke. That is in Dubai, or in Abu Dhabi is abu_dhabi@mfa.go.ke. You can see the emails addresses on the right hand side of your screen. The question for you, Ambassador, comes from one person who doesn't want to be identified, that is anonymous. He is asking, how is the embassy assisting stranded Kenyans, some who are stuck in accommodations, like the TG staff and some fellows who are in Dubai Humanitarian City? Before you answer that, I have to say that this is not a one-off webinar. As the ambassador mentioned earlier, this will be an ongoing exercise. We understand that there are a lot of pressing issues that Kenyans are facing in the UAE, and therefore the embassy and the consulate will be addressing those issues as we go along. So as the ambassador mentioned earlier, he will be hosting regular webinars, whether it's addressing Kenyan business owners or regular employed Kenyans. So don't worry, all your issues will be addressed. But back to the question, Ambassador Kariuki, how is the embassy assisting stranded Kenyans?
Thank you, Joyce, and your team, and thank you, Bill and David, for that very well given presentation. I think I'll go straight to the question and say that we're doing our best. In fact, I touched it during my remarks, where I say the embassy and the consulate have been on, assisting as much as possible to help the Kenyans through the repatriation efforts that we have done. And currently, we have already done about 4 repatriations. Insofar as the jobs and accommodation is concerned, really isn't much that the embassy can do. What we are doing instead is providing those repatriation flights so that people can be able to relocate back home until the situation improves. And secondly, I would also think that we'll have another forum, like Joyce, you have said, where you'll be able to address the diaspora issues in more detail. But currently, we know there are distress cases, and other than for the repatriation, we are also lobbying. And at this point, I'll actually wish to request GTAG also to assist us, because we've been following up on seeking for assistance for the Kenyans who are not able to buy their own tickets and cannot be able to feed. We have had KEDWA, the Kenya Welfare Association, which are coordinating the assistance in terms of food. If you could be able to donate also some food. We have also gotten donations from other people. Last week, we were also the embassy was able to distribute to about 160 families. We are looking forward to also to distribute something next week. But my appeal to you all, businessmen, is also to assist in this endeavor, to assist our fellow Kenyans be given food at least, and if possible, accommodation where we can. And for those who want to travel, kindly, if businessmen and GTAG too, you can assist who cannot assist the Kenyans who cannot be able to buy their tickets, also buy when the next flight comes in. Thank you.
Okay, with something related to flights, Anonymous is also asking that you should at least be informing people in advance when there is an available flight, because at the moment what happens is you normally post information about flights when the flights are already being in the process of being booked. In that case, a lot of people miss out. So at least you should be informing Kenyans in advance whenever there is an available flight. And when you're posting that either on the consulate Facebook or other social media. So Crispin is asking, what will happen to Kenyans who can't afford flight charges that have gradually increased, for the last few weeks? I think you have touched upon that, but you can say something related to that.
Well, Joyce, again, and the diaspora, we unfortunately don't have any way other than what we are currently doing, seeking for assistance from well-wishers, from the businessmen. I remember last week but one, we had the former governor of Kiambu, who promised to give out tickets worth about 500,000. We are still following it up to see whether he can do that. But we are also extending the same appeal to our colleagues to assist, because the government doesn't have the budget for that. Secondly, on what you've just touched on ample time to provide to the Kenyans to buy the tickets, we have already now communicated, and I've already said it in my remarks, that the next flight is going to be on the 11th of July. So we have close to about 2 weeks now prepared to buy the tickets.
Okay. Well, I suggest we cover the diaspora issues first, and then we will go back to Bill and David with regards to ESR. So your next question, Ambassador Kariuki, is, when is the new passport issuance for newborns born in the UAE before the COVID lockdowns commencing, to avoid overstay fines for those not born after March 1st, 2020?
Well, again, I don't know whether my colleague is on, Ambassador Mwendwa. He is the one who is directly dealing with the passports. But I believe the office is currently opened and we are still processing the passports. But we can pick up that later on in our forum, which we are going to also create another webinar soon to address the serious diaspora issues that the diaspora might be facing. Hopefully in about a week or two, we should be able to address all those issues of the diaspora regarding their stay and passport issues. I believe Mr. Mwendwa, Ambassador Mwendwa, is it possible for him to chip in on this?
No, it won't be possible because he's
Okay.
Yeah. But anyway, well, there was someone who was asking about those employers who are holding their passports and cancellation papers. So I think that we will address that in an appropriate platform.
In the next webinar.
Yes. I'll go back to Bill and David. There's a question here about insurance. Would insurance intermediary and insurance consultancy activities fall under the definition of relevant activity? Our reading of the guidance document issued by the Ministry of Finance is that it does not fall within the scope. Can you please confirm this?
The problem with technical questions like this, and I'm not trying to dodge the question, is you need to look at an awful lot more detail. To the questioner, I'm sorry, I know that sounds very, what's the phrase you use? Very Pontius Pilate, washing your hands of it. No, the reality is you really need to look into what's happening, where it's happening, and between what entities it's happening.
Yeah.
So I mean, I'm sorry.
Technically, no, but as David said, we met with an insurance brokerage about 2 weeks ago who said, yeah, it doesn't apply to them. But when we looked at the nature of the business that they did, because they weren't just one company sitting on its own, they had connected businesses with other parties, they did actually come into the loop. So again, the categories that are down there, the 9 categories, are very broad. Some of them are obviously pieces which wouldn't immediately hit people, but you might be in a related area of that business. It's really looking at the nature of your business is what's critical here. So, I see someone's mentioned a question around, freight agents. 100%, okay? It depends on what that freight agent is doing. If that freight agent has their business here, they don't have any connected parties, their business is well funded here, they have their decisions made here, their income is generated here, then that may not fall into economic substance, but you would need to look at that business in detail to see, is it genuinely just that type of a business, or does it have connections with various parties? And freight, you know, obviously there's a lot of connections between freight going in and outside of a country. So that's something that, you know, each case on its own needs to be looked at by that business. It's a very tricky space.
Gideon is asking, are the ESR under the bilateral agreement between UAE and EU, or are they under multilateral arrangement?
So for ESR is actually an OECD driven piece of work, and now it's obviously, you know, there's a number of various international agencies behind this part, but so in terms of agreements that are there, it's part of an overall framework, which is a global piece of work that's happening. So if you look back in terms of FATCA with American businesses and individuals, you know, that created a whole sense of legislation. Then you had the European Savings Directive. Then you have BEPS, which is a big driver behind this, the base erosion of profits. That has subsequently led into economic substance, which, you know, again, was very much aimed at countries that were originally, you know, either no or low tax jurisdictions. You know, in Europe, you have other ones called DAC 6, which is, you know, there's various offshoots of this legislation happening. I guess, you know, it all comes under global tax movement type programs. So yeah, I guess I think that I should probably answer the question that, you know, there's a whole raft of frameworks that this is all linked to.
And with the effects of COVID-19 having negatively affected businesses, what will be the impact of these regulations to struggling businesses?
Yeah, it's a good question. I mean, personally, and I don't know what David's answer on that one is, but I look, it's going to be another challenge on businesses. Unfortunately, you know, when VAT was coming down, a lot of people were struggling in their businesses before VAT came through. But at the end of the day, it's a sign as well that, you know, countries are trying to improve their operating models and their operating businesses. It is going to be an extra challenge in companies, but this is why, you know, it's not very difficult work to do, but the thing is not to stick your head in the sand about it. Has COVID-19 made it more difficult? Yes, which is why a number of the deadlines were extended. Yeah, it's challenging.
Just on that, the for SMEs, the smaller businesses, they're unlikely to fall into this because they're not going to have this international network. They're not sitting here planning how to move tax liabilities from one environment to another. If you're that big, you would hope that you'd be able to weather the storm. If you're also that big and have been clever enough to put in place those kind of structures, you'd like to think that you've also got the regulatory support around you. So, and I don't mean to be unsympathetic, but I suppose the true cost is distraction from what it is you are doing, which is running your business on a day-to-day basis. But you do need to take these things seriously. Look, see it as an opportunity. I mean, and I'll bring VAT and ESR together in one piece. What it's forcing us to do is to run in a very formal manner our businesses. Okay, VAT forced us to do accounting properly. A lot of people were doing them on the back of bits of cigarette boxes. That wasn't allowable anymore. You now had to do things properly. ESR means you now need to think about how your business operates from a compliance point of view with the law. These are good things. It'll cause a shakeout. Sure, not everybody's going to survive. But if you're running your business properly, if you put the time in to ensure that you comply with these and do it early, involve the right people, then you're going to be one of those that survive and can take advantage of the marketplace as it opens back up, which it will.
Yeah, I think we have 10 more minutes left. We need to wind up. So Gideon is also asking, on average, you know, I think this falls under, you know, one of the slides you shared, how GTAG can help. On average, how much will it cost an average business to conform with these ESR regulations?
That's like asking me how long is a piece of string. it really depends on the company itself. So if the company has, poor records, nothing is documented, they don't have an in-house accountant, they do have a foreign connected party, but their contracts aren't done properly. I mean, typically what we do when we do it initially is the diagnostic piece is the important piece. We do a lot of work with companies to do what we call a business health check, which is we go in and do a high level X-ray of a business, which will very quickly tell the client, what particular areas they're failing, what's red, what's green. From that, a person will then be able to more accurately predict, what ultimately they need to do. This gap analysis piece is the first piece of work. So no matter who you end up talking to, just be careful that you don't end up having somebody coming in who starts to create a lot of unnecessary work. I think that's important. But each business will be different, Joyce. So it's very challenging to say to someone, oh look, it's $1,000 or it's $5,000. The bigger your company is, the more expensive it's going to be. But sometimes big companies are run very well, so it might not actually end up being a very expensive piece of work for people. What I do know is if you fail it, it will end up costing you a lot more. That's for sure.
Okay, we don't have a lot of time and we have a lot of questions coming in. Ambassador Kariuki, I will come to you now. There's a question to Ambassador. Would you please shed some light on Government of Kenya tax expectations on Kenyans residing in the UAE and informal employment? Thank you.
Thank you, Joyce. I think I'll only look at what the GTAG people have said insofar as companies are concerned, in compliance with what we do back home. If your company is operating both here and in Kenya, definitely you must be able to comply with those regulations. Two, when it is about the company operating strictly in UAE and you have no branch in Nairobi, I don't think you'll be affected by the tax authorities back home. But as a Kenyan, there is a requirement that you have to file your returns every year or by the 30th of June. So I'd have expected that every Kenyan on their personal return, they have already done that by yesterday, which we also, living and working in UAE, were able to submit by yesterday. But that is on a personal level. On the business level, it is what you've just gone through. If you have no businesses, then you comply with the regulations here. But if you are operating both here in Nairobi and Kenya, then definitely you must be able to comply with the regulations that are attached to tax.
Okay, let me throw in a diaspora-related question here. So we have situations, this is coming from Anonymous, we have situations where Kenyan employees have been rendered redundant and are being sent home without their end of service benefits. Is it possible for the consulate and the embassy to come in and arbitrate between the company and the employees?
That can be done. And like I said from the beginning, this forum may not be able to address all those issues because we want to understand them properly and specifically. But I can tell you for sure, diaspora, the embassy and the consulate is ready and willing not only to arbitrate, but to make sure that you have your severance and final benefits before you are laid off. The laws in this country do not allow employers not to do that. Therefore, they are bound by the law to pay.
Okay, Abubakar is thanking you. He says, we thank you for the great job that you are doing and we are proud. And coming back to David and Bill, a question from Crispin. He's asking, what is the what is the difference between local partner and local agent services when opening a company, and when can you advise us to go? What can you advise us to go with? I mean, I guess he's asking what's the difference between local partner and local agent services.
Well, your local partner. Yeah, your local partner is generally a national, an Emirati, be it an individual or be it an entity owned by an Emirati, which fulfills the requirement to have a 51% shareholder who is a national for a DED, an onshore entity. An agent is a representative, so this is where you are a foreign entity and you appoint somebody to act on your behalf. Think of it in legal terms. You often see the phrase, this agreement does not constitute an agency between the parties. It's just an agreement to do something. If you are appointing an agent, you're appointing somebody effectively to be an extension of who you are or who your entity is.
Okay.
Again, depending on the nature of your business as well, there are for the 51-49% onshore situation, you can actually have that 51% done as a corporate local piece as well, which in some cases, particularly for high growth companies, is a good option to have. So there are pros and cons of each of those approaches. But again, we just as a heads up, if you're looking at setting up in the UAE, then definitely come and have a chat with us, because we work with numerous company formation agencies. So again, we have very good connections to put you in touch with, but it's really about getting your structure set up first, so that when you do go and talk to someone about setting up your agency or your business, I spoke to a chap very recently who was setting up a pharmaceutical business, and almost immediately he was signed up with an agency. And what he didn't realize is that by signing up with that agency also gave them control over his distribution of products in the region. And that's not something, you know, had he got the right advice, he would have done knowingly, you know.
One thing I'll add to that, which both Bill and I have alluded to, you do have a choice of whether to have an individual Emirati in their own name or an Emirati business. So the same individual who owns a business being your partner. The advantage of having it as an entity rather than an individual is whenever that individual passes away, which we all will, you then can find that some of the regulatory paperwork can get slowed down while that person's estate is being managed, whereas if it's an entity, you don't run into those issues. So it is generally, it's up to you. But
yeah, let's cover this last question. When they mentioned shipping as one of the industries where ESR is applicable, is this for shipping lines and airlines only, or does this apply to freight agents also?
Yeah, so I alluded to this earlier. So again, it's about not so much looking at something specifically, say, for shipping. So you may not be in shipping specifically, but again, it'll look at what, you know, if I was looking at that freight business, my first assessment will be, you know, does this fall under shipping? Not necessarily, it's involved in freight, but I'm actually not looking at this to see if it falls in shipping or not. I'm actually looking at this freight business to see what is their setup. You know, do they have an opportunity with other companies in their group to manipulate pricing for services between here and what are other locations that they have? So even if you're not, and that's the kind of whole point about this, even if you're not specifically in one of these 9 relevant activities, that doesn't mean to say that you actually don't fall into one of these 9 activities. You need to look at each business. Some of them are much simpler than others. If you just have one business here, it doesn't come under the 9 activities and you have no interaction with outside parties, you know, 9 times out of 10, that's not going to have to do anything. But you know, the problem is people will make that decision not really understanding the full definitions. And for me, I'm always looking at what's the substance behind the setup. You know, there might be a company here which is set up as a freight company and only operate here and have no other connections. But in reality, if I start looking at the transactions going through their bank account, if I start looking at the way their contracts are written and their pricing is put in place, a lot of that might be trying to pull profits out from a higher tax jurisdiction. That will get picked up. If you don't voluntarily go through that process, then the danger is just like that. There's knowingly making mistakes and there's making mistakes unknowingly. Both are bad, but the worst one is knowingly doing it, because then that starts to move into the criminal space. So again, each business needs to be looked at in its own right. Okay,
thank you very much. I think we have only 1 minute left. So I've received a lot of questions which are diaspora related. What I'm going to do, I'm gonna forward them to the ambassador, and you are going to address them at our next forum. But at this juncture, I would like to give the three of you this time to make your closing remarks. I think we will start with the ambassador, and then we'll go to Bill and David, and we'll close the webinar.
Thank you, Joyce. Thank you, Bill and David. It was a pleasure taking us through these requirements in law for smooth operations in this country. I'm happy that our businessmen were keen to listen as to the need for them to comply. Secondly, I thank GTAG for co-hosting this meeting with us, and we look forward to having another one soon together. For the diaspora, be prepared that in the shortest time possible, 2 to 3 weeks, we will be able also to hold your own webinar where we'll be able to address all those issues that you have raised. They are very, very important to us, and they matter because we care for you and you know what you contribute to our country when it comes to the economic development. Thank you so much.
Yeah, thank you, Ambassador. We have a lot of people thanking you, saying we appreciate what the embassy is doing under your leadership, Ambassador Kariuki. Asante sana. And I think you also appreciate that. And now it's over to you, David and Bill.
I'd like to thank Your Excellency for giving us the opportunity to address everybody today in terms of economic substance. You know, it's great having one of our partners also a Kenyan, and I think that's a big difference. I'm also Irish, and I have worked a lot with the Irish businesses in the region, and I think it's always good to have one of your own in a business on the ground here. So I would recommend to all the Kenyan attendees and businesses to touch base with Joyce and see, you know, are there things that we can help through our various connections and networks with them to get set up, or if they're already set up in the region, any of the other areas that we can help them with. But thank you all for your time today. I really appreciate it and glad to be a part of it.
Okay, I'd like to add my voice to Bill's thoughts. Thank you, everybody, Your Excellency, Joyce, all of you for turning up. You do need to get these various bits of compliance done. Do it. I'll leave you with one other thought. Write up a standards procedures manual for everything you do in your business, please. All right, have a great day.
Thank you very much. Asante sana.
Thank you. Bye-bye.
Okay, thanks.